So OriginClear has now distinguished itself as a successful AquaTech incubator. The first 3 projects it's put its hands on, it's now graduating to NASDAQ.
Hey, welcome to Money Club Mondays, February 5th. Today's going to be awesome. We got all kinds of cool new opportunities. So today we got a really cool show ahead of us. We have my friends from Philanthro Investors, and they have a few different companies where they do different investments, but it's always backed with philanthropy. They've done an excellent job. We've been working with them now for a couple of years. They've been coming on the shows. So Riggs and Ken, thanks for being on, guys. How are you?
Thanks for having us.
Absolutely. We're super excited. I guess the last time we got together, we were talking about, and I'll share a screen right now, and Ken and I will be able to comment on this further. But basically, OriginClear is essentially an incubator, and what we did was we combined everything we developed since 2015 into a company that is now merging with what's called a blank check company. Here's the last big announcement that was made, where we signed a definitive agreement to join with blank check. It's called a blank check company, special purpose acquisition company called Fortune Rise. The actual valuation was actually not 32 million, 72 million. That's been corrected in the Yahoo original, which is a combination of $40 million on the FRLA side in cash and $32 million valuation on the water on demand side. So what's next is a filing called an S4, which is a merger registration with the SEC. We expect that to occur imminently. I can't say exactly when, but the closing date of Q2 remains firm on the business combination. So what are we talking about here? We're basically discussing a brand new thing in water. And those of you who haven't heard about it, water in general in America is in trouble. And what's the solution? Well, we have failing infrastructure with a $100 billion gap every year. And $100 billion is still a fair amount of money. I don't know about you, but I think that's a lot of money, and nobody's really allocating it. And what's further, happening, I don't know if you saw this, but Mexico is booming right now because of all the industries that are coming back from China and other offshoring countries to the North American continent. With that comes new needs to both supply energy and water to these factories that are coming back. So very important. Factories now have to do their own pollution management. Funding, again, here's another funding slide, not important to get into. And the utilities can't take care of it themselves. In fact, they're raising rates faster than the rate of inflation of college tuition. That's how bad it is. So water rates and sewage rates are rising much faster than college tuition. Healthcare, right now, it's the #1 inflation on the country, but that's not solving the problem. Meanwhile, a lot of people are being thrown off the system, which makes things worse. Far right, you see 56% of water utilities are reporting problems with customer non-payment of bills. Well, when somebody doesn't pay their bill and you throw them off the system, now they're on bottled water. It's even worse. So what's the solution? Well, you remember one thing that's very important to remember. The actual users of our water system are industry and agriculture. 90% of all demand for fresh water and for water treatment is by industry and agriculture. 10% is the people, you and me. We need to flip that around. We need to make it so you and me get proper water treatment. And how's that done? By getting industry and agriculture off the central grid and doing their own water treatment, which, by the way, they like very much. That's where we got into something called water on demand. Let's take a look at that. If we do this private water reuse, which is I've been telling you about, you have all these different sites doing their own water treatment. And this means the central plant is less burdened and it can serve the people. We have 150,000 plus water utilities in this country, some of which have as few as 3,000 customers. And I don't know if you noticed, but there's a huge out-migration trend right now, started with COVID, where people are moving out to the boonies or to different states, and those don't have the same high-grade industrial water treatment that, let's say, LA had, right? All of a sudden, they're in Gainesburg, Florida, and it doesn't have the same resources. And so That's why we got to reduce the load on the central plants by having it happen at the margins. Okay. Benefits to companies. They control the cost. Remember, that's the fastest growing cost of any cost category in America. Number two, they can reuse water. Guess what? That's a savings. Number three, they have independence from utilities. So they don't have to be so dependent on the whims or the politics of the utilities. Private water gives businesses control over their water. All right. Now, what do we need to do that? Three things: technology, expertise, and capital. So for technology, we built a company that basically downsizes those huge water treatment systems to the level of a business. Call them pods. I like to call them pods. And you just drop the pods in, plug them in, and boom, the business is doing its own water treatment. Engineering, we have a fantastic company that's been in business for 25 years that does huge water treatment for power plants, hotel chains, and so forth. The final idea is something we created internally, which is a lot like the way oil and gas is funded. We'll talk about that a little bit more. So water on demand, what happens? Well, let's say that you're currently a business that's getting water treatment from the city. Along comes water on demand and says, hey, why don't you do your own water treatment? Okay, sure. And guess what? You don't have to come up with any capital. Just sign this piece of paper and you'll keep being on the meter. No capital required with these cool pods that we're talking about and this more than 2 decades of engineering expertise. Okay, so, and I'm going to have an update about that very shortly because we have some new news about it. Quickly covering the fact that water on demand is unique. Why? Because we are pure play in this water as a service concept, and we're the only company in which regular investors can invest. Everything else is either managed capital. Morgan Stanley manages the 7 Seas project. Cambrian is VC funded. And of course, the top left companies are all public companies that you can invest in, but they're not really pure plays in this water as a service. They're doing the old school stuff, which is the dying business of utilities. This is the patents. I'm not going to spend too much time on this because I do want to spend a bit more time with Ken talking about the new stuff. But basically, modular water is a patented way to deliver water systems in a box. These are some of our current customers, housing developments, et cetera. And it looks just like what you think it would look like in a container, drop in place, and it goes. Also, the same thing with something called pump stations, which I won't get into, but those are important too. And I can play the testimonial videos, but I can just tell you that customers rave about this technology. Modular water, which we launched in 2018, has grown more than 7 times from 2021 to 2023. And progressive water, which is this large scale systems, has done this very similar. 2021 to 2022 is more than double. And as a result, we have a synergy, right? Now, what does that mean? That means that combined, these 3 companies look very interesting. Notice how, bumping along at about $1 million a quarter, and then it more than doubled in 2022, and we're on trend to continue. So that's with the combination of the 3. Water on demand, again, I'm going to cover that. There's some brand new news, so I want to get through these graphs and talk to you about that. Well, what is so cool about us merging with a blank check company? It's the capital, stupid. It's because I'm not calling you guys stupid. I'm using the old saying, it's the economy, stupid. In this case, it's the capital, stupid. Because with the capital that'll be available from this NASDAQ merger, A, we will be a NASDAQ company, which makes capital raising much, much easier. B, there's the capital, whatever capital remains in the blank check company after the merger, which we don't know, but it'll be some amount which we'll be able to put to use for what? For acquisitions. Acquisitions is the fastest way to grow your business, and water companies are available at a very low PE because of the type of business that they are. And sure enough, here they are. I'm not going to get into some of the assumptions, but we are talking about spending in phase 1 about $10 million between cash and stock and getting a huge bump from that because of the revenue. And as you can see, the green here is how the acquisitions will dramatically help with revenues. profits take off. Now, literally, look at this. The total revenues without acquisitions, $32 million down there at the bottom right. Well, look at here. Same year with acquisitions, profit exceeds the revenue without acquisition. That's why this is so important. It's highly profitable. Now, one last slide, and I'll get into the new news, and that is all phases, phase 1 and phase 2 by 2027, we have the opportunity to get in excess of $500 million in recognized revenue, which is very exciting. This is me, came from software, disruption guy, and here is Ken Berenger, who's on the call with us, co-created Water on Demand with us. And so we are now going to talk about some news that we have from the presentation. So I was just doing a big replay. We are very excited about what's happening with Water on Demand. In that presentation, I sandbagged Water on Demand. Why? Because I didn't have any projects. That is changing. We now have a partnership in the works, and this is so cool. I'm so excited about it. This is the segment called mobile home parks, trailer parks. Those have tremendous pollution problems. Typically, they just have a pond where the poop goes. It's pretty sad. And in multiple states, thousands of these are being upgraded. And it's a highly standardized, super simple wastewater processing system, which we've already pioneered. We already do trailer parks. We know how to do it. We've paid the dues. And we're coming into a partnership where we expect to be able to deliver these units on the capital-free basis. And Stephen, I don't know if you know how bad it is for mobile home parks, but we know one customer that we got to before that we had this Water on Demand. She had to give up half her equity in the mobile home park to pay for the water treatment.
Wow.
That's pretty sad. But here's what it is. These things are highly standardized in Texas. This is happening in Texas, where there's a boom going on in water treatment. So Texas has special rules for anything under 5,000 gallons a day. You can drop these things in fast. Nobody pays up front. Investors fund it. We return residuals to the investors, and the investors get a huge amount of equity. Ken, tell them a little bit about how that works.
You'll see a self-sustained system that literally is built in a factory. They water it, they test it, and they drop it, and there's like no contracting involved. And this is a freestanding system that can be placed anywhere. And above it, a micro utility network that'll handle all of the contract enforcement, contract management, billing. And of course, out the other side comes this revenue generation. So what investors enter is something fairly close to a master limited partnership type of arrangement. You're not investing, you got one public and another soon to be public company. You're entering actually into the equation as a property participant. You're entering into a fund where there's going to be $20 million worth of equipment placed on mobile home parks. And the per gallon rate is then throwing off revenue. So you're going to receive 25% net profit on that per gallon fee. And that's for the life of the contract. These contracts are right around 20, 25 years, okay? So the revenue that's thrown off is several times what your initial layout in the equipment is. Now, you have the equipment, and that survives any equity, exit that you choose to take. So that's going to continue to, crank out inflation-indexed income. Water and sewer rates actually outpace college tuition in terms of inflationary impact. So in terms of staying ahead of inflation, if you just stuck with college tuition, you'd be fine, right? But with water and sewer rates, it actually exceeds that. It's on pace to do it with as much real-time change as is energy, but everything is clean. So we believe that the crowd that really wants to promote a greener earth will participate in that. Anyway, getting back to that, you'll collect those revenues, ad infinitum, 20, 25 years. Now, what's interesting is we formulated this idea, and it was really just a concept. We had modular water kicking butt, we had progressive water kicking butt, but then we had this fintech idea of how to make it all happen in the cloud. Now that we've merged these three things, this is a fully functioning, fully operational company ready to go. You're going to be granted, in addition to your 25% net profits, you're going to be, we carved out 10% of Water on Demand. Now, at the time, again, our thoughts were maybe we'll do a Regulation A, and in 3 or 4 years, it'll be public. So we were extremely generous, thinking it was going to be a long time before we had to, part with that stock. Here we are. We're about to sign an S4, hopefully, right? So 10% of that company is going to go out to the investors. The first 20 million, we're about halfway there. So you'll get a pro rata share of Water on Demand. Okay. And in a one-on-one conversation, I can break down actually what that's worth today, what's it worth when we merge the two entities, and then based on our growth projections, what that might be looking like in 24 or so months. But 10%, and that's free grant of stock. Okay. So it's worth more than what you invest in the equipment as soon as it hits the market, in theory. And then secondly, you're going to receive a second grant of stock. Now, this is in the parent OriginClear. OriginClear has now positioned itself successfully, I might add, as an incubator. We created 3 companies. 2 were from nothing, from the ground, right? PW2 we took on that had a successful 20-year business, but the other 2 were ideas. We took on the brilliant Dan Early and all his designs and his vision, and we financed that and was able to turn it into a multi-million-dollar company. And of course, Water on Demand, which was the fintech that rides above it. So OriginClear has now distinguished itself as a successful AquaTech incubator. The first 3 projects it's put its hands on, it's now graduating to NASDAQ, right?